Hey there, Amy with Team Live Love Louisiana. Wanting to learn a little about some specific loan types that may benefit you? Today we're going to show you just that. We're going to be talking to a lender that will answer some very simple questions and give us some details about what the home buying loan process will look like. Stick with us and let's take a look. Hello there. Today I'm here with one of our preferred lenders with Gul Mortgage Group, Todd, Villar. So we have a few questions as they relate to first-time buyers and then in general the home buying process, and we'll hone in on FHA loans a little bit. So let's just get started with our questions for Todd. Okay, Todd, when getting ready to purchase a home, what's the first step a potential home buyer should do?
Well, Amy, I think the first thing somebody should do that's getting ready to buy or wanting to inquire about the process, first of all, they want to contact a local lender that they referred to. And two reasons. The local lender part of it was having somebody local is that somebody that's going to pick up the phone or that you can drive to their office if you have a question or want to meet. I think meeting is so important, especially for the first-time home buyer. It's typically a person's biggest purchase they'll ever make. And I think it's important to go sit face to face with the person you're going to be dealing with, to ask the pertinent questions, to get that comfort level and build a rapport. But I think it's important to get the referral from maybe the realtor they trust, somebody that realtor or a friend or family has done business with in the past, so they have a comfort level, and somebody that has a track record of being knowledgeable, of being honest, and having the education and the knowledge of the industry to make the right next step, so to speak.
Okay, I agree with you. I think having a local lender, somebody that you can, hey, Todd, here's my problem. How can we find a solution? And number of years of experience your lender has is very important too. So having someone local, I agree. Having someone that has confidence and knowledge in the business and years in the business, it's invaluable. So what's involved in the process of getting pre-qualified to purchase a home?
Well, I'll tell you what, it's a very simple process, really, Amy. I mean, and some people get intimidated by that process, and they really should not. I mean, it's, first of all, they contact, what typically occurs when somebody calls me about pre-qualification. I first give them the opportunity to say, hey, look, you want to come in and meet? We can take a verbal credit application and meet. I can answer your questions. Or, in this busy world and with technology being what it is today, a lot of people don't want to take that time to meet, even your first-time home buyer. So there's that option of doing an online credit app. Okay. It's very simple, takes about 5 minutes to do.
Okay.
They would complete the application, okay? I would then call them and ask them questions that pertain to what they're looking to accomplish. Okay, what kind of price range are they looking in? Do they have a down payment? Okay. All those things. I ask those questions. I go over the application because sometimes they miss things on app, and to make sure that's all correct. And again, there's no right or wrong there, right? I mean, apps sometimes are a little vague. So it takes some further discussion. So our goal is to do two things. One, try to accomplish what that client is trying to do. And two, let them know if or if not, whether we're able to accomplish that goal, whether they can be pre-qualified for what they're looking to do. When a client's wanting to get pre-qualified, they may have a general idea of the price range. Well, but they have no idea what the payment might be. I mean, there's a lot of different components to a payment: the principal and interest, the taxes, the insurance, and if there's PMI involved. So, it's making them knowledge, because what's more important as someone getting pre-qualified is somebody feeling comfortable with the note they can afford. Just because they can be pre-qualified for something doesn't mean that's what they should buy. Sometimes people have a preconceived notion too that maybe I'm not to the point where I can get qualified. You'd be surprised. I mean, I've had surprises on both sides of the fence, right? The ones I like is when somebody says, look, in the beginning, I can't get pre-qualified because of this, that, the other. There's a lot of programs out there now. I love giving somebody a surprise to say, yes, you are qualified, and this is what we can do. And, sometimes there's multiple options there. We do have occasion where somebody is not ready to buy a house, whether it be they have credit issues or they have income to debt issues. But what we do is here at Gul Mortgage Group, we won't leave you and just tell somebody, no, you can't get qualified. Okay? We're going to say, at this time, you're not qualified, but if you take these steps, you can get to be pre-qualified. So we don't want to ever leave anybody leaving here without any hope, because there is hope, and you can build on whatever you need to build on. And, whether it be 2 months, 6 months, a year, time flies by quickly. So it's getting that person ready.
I agree, and I think everybody can be a home buyer. If you're not ready today, tomorrow, 3 months, 6 months, or 12 months down the road, if you put in the effort and the work and the due diligence, you can be prepared to buy if you get a no, not today. Okay, Todd, what documents are necessary when applying for a mortgage?
Well, typically speaking, I call it the 222. I kind of simplify it. Basically, I need 2 pay stubs. I need a month's worth of pay stubs. So most people typically get paid twice a month. So I get 2. Well, if you paid once a month, I'll get 1. If you paid 4 times a month, I'll get 4. Okay. So, but the pay stubs, I would then need W-2s, 2 years W-2s, if they're a W-2 wage earner. And if they're self-employed, I would get 2 years tax returns, both, whether it be personal and business, depending on what structure or what employment the client has. And then the other thing is bank statements. I would typically get 2 months bank statements, both checking and savings. We don't necessarily need that on the front side for pre-qualification, but it's very helpful. And the reason is garbage in, garbage out. Somebody could put on an application that they make $10,000 a month, but say they're a business owner and they have a lot of write-offs. Well, their CPA's job is to try to help them pay as little taxes as possible. So their net money may be $5,000. So, instead of being able to pre-qualify them on $10,000, I'd pre-qualify them on $5,000. So that's why having that information on the front side is important to analyze that. Because the last thing you want to do is send somebody out working with the realtor with an expectation that they can get approved for one price range house, but that not be the case. Maybe that's a lot lower based on what the income to debt says and what those income docs.
To piggyback on that, I kind of agree. I think it is important to get documents to the lender as soon as possible, just so that he can kind of concrete the application, the paperwork. It's all jiving, and the result is you being pre-qualified for X dollar amount as far as the sales price is concerned. And on the last question, sometimes we live and learn the hard way, and it's okay to admit a mistake. One time, took somebody out shopping for a house. They were pre-approved for $260,000.
Right.
Wrote up a contract. When he checked back with his lender, it wasn't you, and I'm claiming to be the one who made the mistake not to follow up in advance.
Right.
But live and you learn, and you make the correction next time.
Sure.
So $260,000 sale price. A couple days after we wrote the offer, we were doing inspections, and he was learning what his note was going to be monthly, and he was shocked. And it was an unpleasant shock, and it was a number he wasn't comfortable with. So it's a problem. In the beginning, I always now encourage people, okay, you pre-approved for $260,000. Let's get an idea what that looks like monthly to make sure it is a good number that you're comfortable with on forward for the next 30 years, potentially. Let's go to the next question. What roles do credit scores play in the pre-qualification process?
Well, I'll tell you, credit score is very important. Okay, of course, it pertains to what your credit looks like, as far as the way you pay your bills, how much debt you have, installment and revolving, those sort of things. It's not everything, because there's all these different factors, like we just touched on income. That's part of the process. But credit scores are going to tell you this. One, they're going to tell you if you're in a range to get qualified. It's going to tell you what program that you could get qualified in. Okay. But which is one of the most sensitive things is, and everybody's biggest question, what rate you're going to have. Credit score will determine those things. Obviously, the higher the credit score, the better.
Okay.
I mean, so it tells a lot. It's not everything, but it's extremely important.
And one thing I've learned on the realtor end is that on occasion, most often I find some of your online sources like Credit Karma oftentimes isn't accurate. So I always say, if you have an attorney question, let's get you to an attorney. If you have a credit question, go ahead. If you think you're ready to pull the trigger and become a homeowner, take this first step, get pre-qualified, and it's going to give you a crystal clear picture of what's going on.
And it's confusing for me, and I've been in this industry over 30 years. I mean, I'll have a client come in and say, yeah, I have a 800 credit score because I went by the truck from the dealership and they pulled my credit. Well, what most people don't know, there's different scoring models. And when you're applying for a home mortgage, that is a tougher model than the auto finance. And same thing with Credit Karma or these other, or your credit card with the bank that has a scoring system. They're not exact.
Okay.
And I will tell you for sure, on most of these, when you do a mortgage report, that credit score will be lower.
Okay, Todd, what are the most common first-time home buyer loan programs?
Well, Amy, there's three that really come to mind when we talk about the first-time home buyer. And when we say first-time home buyer, it's really in some cases interchangeable with someone who doesn't own a home now. And they could have owned a home previously. So it's a little, what typically first-time home buyer refers to is a program designed for people who don't have a large down payment. Not necessarily that you haven't owned a home. It's just providing programs that allow for people that don't have a big down payment. And really three come to mind there.
Okay.
You have two loan programs that will finance up to 100% of the purchase price of the home.
Okay.
Those two being one, Rural Development, USDA, Department of Agriculture, a fantastic program that here in Ascension, how we still have it, I don't know, but we're still considered a rural parish. If you talk to anybody drive down the roads, they wouldn't say it's a rural parish, but hey, we'll take it. The other is VA, a veterans program. Of course, having said that, VA, you do have to be or have been a veteran and have a certificate of eligibility. So that will wipe out some people. But that rural development program, you can purchase in a parish or an area that allows for the rural development program. There's certain other criteria to it, but it does allow you to get into a house with no money as far as down payment. Now, there's still the closing costs that have to be, but if you get a good realtor like you can negotiate for the seller to pay the closing costs.
Absolutely.
So, or a part of them. So really, it's allowed an opportunity for people that would have never had an opportunity to buy a house to purchase a home. I'll tell you, one of the really hot programs right now is FHA. Okay. Now, FHA does require down payment. It's 3.5% down. Okay. But I'll tell you what, I'm very high on FHA right now for a couple of reasons. It's pretty much got the best pricing out on the market right now. Okay, so the rates are better on those programs. And it's one of the more forgiving, I'll say, programs out there in terms of debt ratio.
Okay.
Or some of the things credit-wise that have occurred. You know, I would tell you this here at Gul Mortgage Group at this current time, it hasn't always been like this, but FHA is really bridging a gap right now. It's been the most popular program. They allow for that higher debt to income ratio, and with with insurance costs being what they are, and the average starter home price going up, that plays an important role. So 3.5% down, and what a lot of people don't realize, the customer doesn't necessarily have to have that money. They can get it from a gift, from a family member, a parent, anybody like that. Anybody has a close tie to that individual. If you're fortunate enough to have somebody that's willing to give you the 3.5%, you can get into the FHA program. So those are your main three first-time home buyer programs out on the market today.
Okay. And when we're talking about 3.5%, just to clarify, if you haven't ever purchased a home before, 3.5% of the sales price is what would potentially be due if you utilize an FHA loan on closing day. So that money You usually need to have it accounted for a couple weeks before closing. The lender's going to want to see proof that you have it. If you get a gift, there are appropriate channels that you need to take to get the gift, and the lender can guide you as to that. So you don't want to just, get a check from mom one day and deposit it into your account. Let's make sure it's taken care of in the right steps so that that money can be considered to be yours to use on closing day. The lender needs to be satisfied with how that came about into your account.
That's so important, Amy, and I'm glad you bring that up because, yes, it is very important. And all these different programs that you mentioned, the rules are different. So the best advice I can give you when you're working on a mortgage is to the lender that you're working with, consult them before you make any moves. I tell people, keep everything the same and don't do anything until you speak to your lender in terms of finance wise, as far as moving money or create new debt or all these things. Don't assume.
I agree 100%. And in closing, I just like to stress a lot of people like to find business partners online. And oftentimes, that will lead you in a good direction. I find it to be a slam dunk often to get a referral from a family member or a friend or another professional in the business that you know, love, and trust, because professionalism, confidence in that person's ability to do their job and to guide you in the right direction with the best advice from a realtor, from a lender, from a title standpoint, from a home inspector, an insurance agent. There's so many different, very important pieces to the puzzle that every part is super important. And I think it's important also to have that connection with someone if you have a problem or when you have a problem, because guess what? Something happens every day.
Right.
No two deals are alike. There are road bumps, and it's our job to help you to navigate through it to get to the goal. So hiring a professional like Todd at Gul Mortgage Group, working with a professional like me at eXp Realty, we welcome your business. We would love to guide you and to walk with you along through the home buying process. So I'd like to thank you very much, Todd.
Well, thank you, Amy.
It's always a pleasure to talk to you, and even more of a pleasure to work with you.
Oh, well, likewise.
Thank you very much. So we'll drop the contact information for Todd so that you can find that in the comments below here on the YouTube channel. And thank you very much for watching. Thank you very much for watching our video. I hope you learned a lot about the FHA loan process. And if you liked what you heard and you would like to hear more, or you would like to be aware when we do have more videos, go ahead and tap the bell to receive notifications. And please subscribe to our channel. We would love to have you follow along with our journey and learn more about our area and the home buying process and all that's involved. Thank you so much.